Welcome to the deep dive. Today, we're really getting into public company financial reporting.
Yeah, looking at how these big companies break down their performance for, you know, investors, regulators, everyone watching.
We've got sources covering segment reporting, these NZ80-wide disclosures, SEC rules, Reg SX, SK, and even XBRL, that digital reporting language.
And our goal is really to see how all these different pieces fit together to give you that clearer picture of what's going on inside.
Exactly. And look, this matters whether you're investing, working in finance, or honestly just curious about how major businesses tick.
It really gives you insight into their structure, their performance, potential future.
Mhm.
It's like looking under the hood.
Totally. And here's a little something interesting to start. Did you know companies have to name names? Well, almost. If a single customer makes up 10% or more of their revenue.
Huh. Yeah, it's like finding out a company's biggest fan or maybe its biggest risk.
Okay, so let's dive in. Segment reporting. What's the main idea there?
Well, the core goal is to help you understand the different parts of a company, how each bit is performing, what its potential is for future cash flow.
So you can make smarter judgments about the whole enterprise.
Precisely. And, what counts as an operating segment is quite specific.
Right, can't just be any department, can it? What defines one?
No, definitely not. An operating segment has to earn its own revenues. Its results get reviewed by the top decision maker, the CODM, for resource allocation.
Okay.
And crucially, it needs to have its own separate financial information available.
So like a company's software division versus its hardware division, maybe, if they're managed separately.
Exactly. But something like the corporate headquarters or, say, the company pension plan, those usually aren't operating segments themselves.
Got it. So how do they pick which ones actually get reported separately in the financials?
There are tests for that. The main ones are the 10% size tests.
10% of what?
Good question. It's 10% or more of the company's total revenues, or its reported profit or loss, or its assets. If a segment hits any of those thresholds, it's likely reportable.
Okay, one of those three.
Right. And there's another layer. The total external revenue of all the individually reported segments needs to add up to at least 75% of the company's total consolidated revenue.
The 75% sufficiency test. So making sure we see most of the picture.
Exactly. If it doesn't reach 75%, they have to identify and report more segments until they do. Any remaining small segments just get lumped together in an all other segments category.
Makes sense. So for those reportable segments, what details do we actually get to see?
You get quite a bit. Key things are the segment's profit or loss, which includes revenues from external customers and sales to other segments within the company.
Oh, interesting. So intercompany sales are shown here.
Yes, at this stage they are. They also report things like interest revenue and expense, depreciation, any unusual items, significant non-cash items.
And assets.
Yep. Segment assets are disclosed, plus info on investments in associates, joint ventures, and capital expenditures for the segment, and how they measured all that.
And this segment view, it has to eventually tie back to the main company financials, right?
Yeah.
It can't just float out there.
Absolutely. There always has to be a reconciliation. You need to see how the sum of the segment's profits, assets, etc. matches up to the company's consolidated totals.
Okay. Now, what about companies that are simpler, maybe just one main line of business? Do they skip all this?
Not entirely.
Yeah.
Even if they don't have multiple reportable segments, all public companies have to provide what are called entity-wide disclosures.
Right, the broader view. What's included there?
This covers a few key areas. First, revenues from external customers for each major product and service line.
So you see where the money comes from product-wise.
Exactly. Second, geographic information. You need to see revenues and long-lived assets broken down by the company's home country and any individual foreign countries that are material.
Okay, so location matters too.
Definitely. And third, back to our starting point. Information about major customers. If any single customer represents 10% or more of total revenue, that fact has to be disclosed, though usually not the customer's name.
Got it. Product, place, and major players. Now let's shift gears slightly to the rule makers, the SEC. Regulation SX and Regulation SK. What's the deal with those?
Okay, so Reg SX basically dictates the form and content of the actual financial statements filed with the SEC. Think balance sheets, income statements.
The numbers themselves.
Right. It covers both the interim, like quarterly reports, which need a review, and the annual reports, which need a full audit. It specifies what statements are needed, the periods they cover, specific disclosures like dividends, consolidation principles, debt issues.
Okay, the nitty-gritty financial statement rules. What about SK then?
Regulation SK is more about the narrative and qualitative disclosures around the financials. It's less about the specific numbers and more about the context.
Like the story.
Kind of. It covers the description of the business itself, major risk factors the company faces, legal proceedings, and critically, the management's discussion and analysis, the MD&A.
Ah, the MD&A, where management explains their view.
Exactly. They discuss results, liquidity, resources. SK is more principles-based, focusing on disclosing information that's material to an investor.
So SX is the financial blueprint, SK is the commentary and context. Makes sense. Okay, one more piece. XBRL. Sounds technical.
It is a bit techy, but the idea is simple. XBRL stands for Extensible Business Reporting Language. Think of it as adding barcodes or digital tags to financial data.
Barcodes? How so?
Well, instead of just being text in a report, each piece of financial information like revenue or net income gets a unique computer-readable tag based on a standard dictionary or taxonomy.
So computers can understand what the number actually represents.
Precisely. It makes the data machine readable. The whole purpose is to improve how financial data is communicated, allow for much faster access and comparison.
This analysis gets easier, quicker.
Way quicker and more powerful. You need to know terms like tags, the labels, taxonomies, the dictionaries like US GAAP or specific SEC rules, and the instance document, the actual report with the tags.
And companies have to use this now.
Yes, the SEC mandates it through its interactive data rule. Most filings now use inline XBRL or iXBRL, which cleverly embeds these XBRL tags directly into the human-readable HTML filing. So you see one document, but the computer sees the tag data within it.
Okay, so pulling it all together, we've got segment reporting showing the parts entity-wide, giving the broad view, SEC rules setting the standards, and XBRL making it all digitally accessible and, well, usable on a large scale.
Exactly. And what's really interesting, I think, isn't just the compliance side. It's the story these disclosures tell when you put them together.
How so?
Well, looking at which segments are growing or shrinking, or how much revenue comes from different countries, or that reliance on a major customer, it paints a much richer picture of a company's strategy, its risks, its overall health.
So for you listening, having this framework helps you understand the depth of information that's out there. It empowers you to look past just the headlines.
Right, you can dig deeper into the fundamentals. And maybe a final thought to leave you with.
Yeah?
Consider this. If you see a company gets, say, 30% of its revenue from just one customer, what potential risks does that immediately bring to mind for you? What opportunities might it signal? That's just one question these reports help you start exploring.